All right, what's good? What's good? What's good? It is August the 17th at 9:02 a.m. We got the market lined up for you guys. We're gonna have a great week. Easy to see, easy to spot. We're gonna give you guys some details about how to take your trades. All right. Essentially, what you got to do when you're trading is always understand where your power is coming from. If you don't understand where your power is coming from, trading just becomes difficult. You got to understand how your play gets into formations to acquire the power to move up, to acquire the power to move down. This way, you don't get basically you get very subjective, right, about what you think that the market can and cannot possibly do. All right, you'll start realizing that it's not just about levels, it's about your plays actually being equipped with power to sustain upward and downward price action. All right, with that being said, essentially, markets present the following scenario. You only have two real scenarios in a market, right? Either the play has the ability to sustain upward or downward price action. What is that called? It's called a freaking uptrend. It's called a freaking downtrend, right? Or the second alternative, you are in a freaking range. What is a range? Range is showing me that you do not have the type of power to sustain the movement that you're doing, which means that you're actually trying to build it up. So what? So that you can actually sustain upward and downward price action. All right. So to start the morning, right? This is very crucial, very important for traders to understand. To start the morning here, looking at the NASDAQ, this play is absolutely in a freaking range. Off rip. Off rip, what do you know you got? Man, I know I'm gonna get the best moves. Watch this instantaneous just because it's in a range. I'm gonna get the best moves off of a move to the bottom of that range or to the top of that range, right? You start asking yourself for the NASDAQ, where could we find the bottom of that range? Well, this is where you need to understand market structure, right? This 4 hour chart is not in a downtrend. We already have a strong move down coming into its trend, right? Into its trend here on the 4 hour chart. And also, even the play wants to watch this overextend. This is what is known to happen in the markets: manipulation, liquidity sweeps, right? Even if it gives a further stimulated move to the downside. Look at that 5 SMA on the daily chart. My friend, that is the daily uptrend here on the NASDAQ, right? So the market is telling me already, no shadow of a doubt, we can't sustain downward price action. There's just too much higher time frame trend that's down there, right? Is it that clear? It's telling me that. But watch this. The market is also trying to be tricky with you. Why? This is why I tell you, you're not going to be able to not tap in to understand market structure. If you're trading basic support and resistance, you're not going to understand market structure. You're going to find yourself on some lackluster plays. You're going to find yourself eventually finding out that you're trading high probability setups, in your opinion. This is where you're going to be as a trader, right? If a building is standing up in the sky, watch this. We don't get high probability scenarios as to why the building is standing up in the sky. Literally, the damn building has the same things that is required for that building to be up in the sky: foundation, pillars of support, right structure, right? Concrete, cement, steel beams, right? We, damn, you put all the components together so that the building can actually stand up, right? So with trading, it's too subjective about what creates upward movement. You ask 10 traders, volume, price action, news, patterns. You're getting too much. And it never becomes that simple. So the market's already starting to show you a little bit of a bounce here, right on cue, literally, right? We're getting that bounce here because I told you you're overextended already in touching that 4 hour chart structure. How do I know it's overextended? You pay attention to the trend, the trend of the play that brought it down there, right? This is a big thing for me with trading. I understand that when I get a strong move up down, watch this. I don't just think to myself, hey, momentum will just carry the play. That's saying the momentum of how quickly a building was built is what's carrying and what's keeping it up. That makes no sense, right? It makes no sense. Hey, they built the building real fast. It should stay up for generations. No, did they take the proper steps to ensure that the building would stay up for generations? Nah, momentum. They built it real fast. Okay, you see what I'm saying? That's the dynamic that I go through with talking about trading markets with a lot of traders. That dynamic, that conversation is essentially what comes into play. All right, so here with the Nasdaq, you can already see that it was trending to the downside, right? Already, let's just say it was speculation. I think that the market, watch this. I think that the market's coming back up. Watch this. The 1 minute chart is actually proving it. How? I can see that my proper downtrend formation, 5 SMAs leading, the 10 SMAs in second, 20 SMAs in third place, is actually coming down in proper downtrend and formation. This is what a downtrend looks like. The 5 SMA leads, 10 SMAs in second, 20 SMAs third place. Watch this. You're not going to believe the dynamic when we get out of that formation first because the 5 SMA begins to go flat, right? The 5 simple moving average goes flat, then crosses over the 10, struggles with the 20 because it's still coming down, right? Once we reclaim that, you're not going to believe this. I promise you, you're not going to believe this. We start to have upper price action. I know. You're not going to believe it, right? It's just silly lines on the chart. You're not going to believe it. You're not going to believe that this strong move down that the market just had was only coming down because it had the reinforcement, the backup to go down, right? Not momentum, not momentum. No, sir, not momentum. Especially when you hit higher time frame structure that is not in a damn downtrend. Not in a downtrend. 4 hour chart is not in that formation. 5 SMA is not leading below the 10 simple moving average, below the 20 simple moving average. It is not leading. In fact, you're trying to break down its structure. Got you. Yep. So the first time frame that can do that, I guarantee traders are not watching these videos. I promise you, they're not watching back these live recordings because it ain't no way. It ain't no way that you would just be thinking if you watch my videos of where plays are getting their power from to do what they do. You wouldn't be so open minded about why you think plays can do what they do, bruh. You have to reinforce. Trend is a big component of how plays sustain upward and downward price action. It's not that difficult. Add a few lines to your chart and eventually walk through me. I'm generally hold and guide your hand, right? So the 1 minute chart has already got in from a downtrend formation, 5, 10, 20, to 5, 10, 20 the other way. 1 minute chart is no longer in a downtrend. It even has the Bollinger Band ride. What does that mean? This top band here shows you where the 1 minute chart had a supply area, right? And riding the Bollinger Band here, see how it's riding the Bollinger Band? The 1 minute chart has conquered its supply. So it's in proper trend formation and it doesn't have overhead from supply. Strong resistance, right? However, you need to look at trend from a multi standpoint viewpoint. The 5 minute chart is not yet in that formation. Say what? Yeah, 5 minute chart had a 5 SMA coming down, 10 SMA second place, 20 simple moving average in third place, right? Was not in that formation. What's going on? What's going on, Matt? Was not in that. It's not in that formation, but it does have what we call a V-shaped recovery. What's a V-shaped recovery? The 5 SMA when it does this V-shaped recovery tells you that you hit demand. Now tell me if that makes sense. That it tells me that it's telling me by the formation just of the 5 SMA doing a V-shaped recovery, which you can clearly see. Tell me if that makes sense when I actually believe. Watch this. I believe, right? You may call it speculation, right? That the 4 hour chart is not in a downtrend. Not in a downtrend. This 5 SMA is above the 10. The 10 is above the 20, right? Not in a downtrend. I believe we're at 4 hour charts uptrend. And the 4 hour charts trend, let me know if this sound makes sense. The 4 hour charts trend is stronger than the trend of 1 minute, than the trend of 5 minutes. That makes sense? Got you. So watch this. No speculation, no guesswork. I need to see if it really is strong. Watch this. Not just sudden candlesticks. That's not enough severity. Not just sudden candlesticks just giving me a green price action. That means you're going to be a price action trader. No, we trade structure over here. We understand that the structures are what lead. The structure is what's telling us why we should bounce. The structures is also what's telling us that we should stop downtrending on the 1 minute chart first. Why? Because that's the first time frame where it stops. On the 5 minute chart second, here it is. The 5 minute chart is not in an uptrend formation like the 1 minute chart, but it gave us a V-shaped recovery. We still got some problems though because we're running into that 20, right? See that 20 second moving average? We're running into it. Now, did we have problems? Watch this. Instant replay. Instant replay here. Did we have problems with that same 20 simple move on the 1 minute chart, even though we were at demand? Absolutely. We were popping up, doing our thing. Did a nice little crossover here. 20 SMA still coming down at an angle. Yes, sir. We got to go ahead and knock that out. Knock out the sellers that are causing that 20 simple moving average to come down at that particular angle. Look at that. That's a very nasty angle. Once you use moving averages, you start to understand the pressures of the selling pressure or the pressure of the buying pressure as well. The angles of those moving averages, they are not subjective, right? They're not just on your charts for a freaking display. They're telling you about what buyers and sellers are actively doing, right? As a trader, you should always know what buyers and sellers are doing inside of your play, right? If you were a market maker, you could literally see where buyers and sellers are sitting on the charts. Nothing becomes opinionated for you. Hey, there's more sellers here than buyers. What do you know already? Market's coming down, right? Not even opinionated. No, it's factual based. Got you. So trading is factual based. Watch this. We don't got all the intel. So we got to use things that are more so factual based, right? And how they're presented to us to make trading based decisions. We start doing things that are subjective. Oh, this candlestick, this 3 bar setup. 3 bar setup? Yeah, this 3 bar setup means we're doing. No, the hell it doesn't. The facts about trading is that more buyers and sellers will cause the market to go up. More sellers than buyers will cause the market to go down, right? You keep it nice, short, and simple, right? And you need to be able to see what buyers and sellers are actively doing. What wave of them, all that good stuff, right? So what we got here on the NASDAQ, right? And what they're being tricky about, because I told you we saw that 4 hour chart trend is actually coming up, right? The 5 SMA is leading. I'm literally telling you the sauce. The 10 simple moving average is in second place. The 20 SMA is in third place. That's a freaking uptrend on the 4 hour chart. How do you break the uptrend on a 4 hour chart? Glad you asked. The smaller time frames stop freaking downtrending first. Not just price action. The, they have to stop downtrending, right? You can't just come with downward price action void of the trend. Like for instance, look at the 1 hour chart. Let me show you guys, cut right to the chase. The 1 hour chart is not in downtrend formation. What do you mean? 5 SMA has not even crossed the 20. Hasn't even crossed the 20. The 1 hour chart, right? Now what's the smaller time frames you're talking about that need to be downtrending to take on the 4 hour charts trend? So glad you asked. Every time frame from the 1 minute chart to the freaking 1 hour chart should already be downtrending. You can't address the 4 hour chart structure if you're still addressing the structure on smaller time frames. People don't understand this dynamic when it comes to trading. I will have traders that sometimes will be stuck in the loop for like 2 years, right? Trying to understand how trend has a relationship with itself. How you at stage 7, and you haven't completed stage 3. You gonna feel the effects for skipping steps. Got you. Got you. They say they understand it, but I know they don't be always looking back at the charts to see where we are in the process. 1 hour chart is not in a downtrend. Price action already down here attacking the 4 hour chart structure. Look at it. It ain't no guesswork. Look at my moving average being attacked right now. And that's an uptrend formation on the 4 hour chart. So smaller time frames, you both ready to go, right? Yeah, 1 hour chart is not ready. Look at this. 5 SMA leads, 10 SMA struggling to still cross the 20. And I have a Bollinger Band underneath right here on the 30-minute chart. What does that represent? Demand. It's narrow. Demand. Up top, narrow supply. They're going to bounce the market up to start. Market's going to bounce up. Now, here's the problem with the bounce up. That supply area has already greatly neutralized the trend. That trend is more so in terms, that's why I tell traders the most important thing I can actually teach them is trend. It's the most important aspect I can share with traders is trend. And essentially what you got here for the NASDAQ is the following. Hitting that supply has changed my trending structure so severely. My bounce up from the 4 hour charts trend, which creates demand, which we're going to get. Oh, we're not even debating. You're not debating? Market ain't open yet. You're not debating? No, we're not debating. We already see the 1 minute charts changing structure, 5 minute charts changing structure. We up here ready to start trying to change the structure essentially on this 15-minute chart, right? We know that. However, the structure has been so severely. Hold up, Reggie. Hold up. Hold up. Pause. 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 All right. So we hit a demand area. We're bouncing up. The 1 minute chart trend changed first. The 5 minute chart gave a V-shaped recovery with the 5 SMA. It's changing second. We're at the point where we're trying to attack the 15-minute chart structure. So what sequence of events should traders maybe be looking at? Man, you can look at whichever sequence that you want to, but the ones that I use is the 1, 5, 15, 30, 1 hour, 4 hour daily, right? I understand that these, I cover a lot of different time frames. People use 2 minute, 3 minute, 7 minute. People using different time frames, right? I cover a lot of bases by using the 1, 5, 15, 30, 1 hour, 4 hour daily, right? And starting to see how market structure essentially corrects itself, especially from stronger downward moves, right? But like I said, this is a typical scenario where if a trader is only falling in love, for instance, we're looking at the market from the 1 hour, 1 minute to the 1 hour chart, right? Which oftentimes traders do. You can ask traders, what's your favorite time frame? 15 minute. So you think that that 15-minute chart structure is somehow void? Watch this. Has no dependency upon the structure being able to follow on a 30 or 1 hour chart or a 4 hour chart with the 15. The 15-minute chart is your leading time frame to see how your market structures itself. The 30? Nah, I use a 1 hour. Okay, so let's say this question. Does the 1 hour chart become your leading time frame to see how market structure is set up? Void of other time frames. No, that's the viewpoint that you're looking at the market structure, and it is not independent of the other time frames. What does that mean? That means if the 1 hour chart gets into an uptrend, and the 4 hour chart cannot, you're going to get a freaking correction. Why? Because your 1 hour chart structure or viewpoint is not independent of the other time frames. You got to see the entire picture, right? You have to see the entire picture. Traders, stop falling in love. I've said this a million times. Stop falling in love with your favorite time frames to look at market structure. If you see it doing something on one time frame, you better look to see if it can also start to do it on another. Does it have to do it at the same time? No, and it will not. You put a race, get into a trend first, 1, 5, 15, 30, 1 hour chart. 1 minute chart will win every single time because it gets into trending formations first. However, let even the 5 minute chart not be able to follow suit. That 1 minute chart trend is not independent. That it can sustain upper price action without the assistance of other time frames. Why? Because they're all interconnected. It will reverse if it can. So that's the scenario that we got here now. And what people don't realize in coming into markets is how the trends already tell me what I'm dealing with. When I look at the board, the daily chart is trending what? Upward. The 4 hour chart is trending what? Upward. Is that what happening on the other smaller time frames for people who think that the market needs to have all these confluences to move? You don't understand market structure because we are not in an uptrend on all the other time frames that even are smaller. The 5 minute, the 15, the 30, the 1 hour, they're not in uptrends. Bigger ones are in uptrends. So what is it telling you? It's telling you that when you have a run-in with those bigger time frames, they're going to correct smaller time frame structure. Why? Because it's all interconnected. All right. Now, this is the danger of today's market. Today's market is already telling you with that strong drop off and sell off that you've had and having your pre-market up there, that even with the bounce, watch this, even with the bounce on this play, pre-market high area, if you make it up there, is an absolute struggle for you, right? Because you got to deal with previous day high first, right? Oh, this is a struggle because I'm already seeing how we can't get back into what? Formation. Look at that. Where the 5 SMA leads. This is a 15-minute chart for the NASDAQ. The 10 simple moving average is in second place. And the 20 simple moving average is in third place. We can't get back in first off trending formation. Secondly, that Bollinger Band, it is narrow. I don't know. It got it open up right now, but bruh, that's a supply area and coming back up there towards that pre-market high area. That's a supply, right? So it's already telling me that even if you start to get your trends, which you're not, This 5 SMA not going to be crossing back over through that 20. That's the power of moving averages. Nah, don't move like that. It's not a 1 minute chart. Nope, that's the 15. It's not going to be getting back into uptrend formation. I already see that they're going to bounce you. You see it. I see it already. Boom. Thank you, moving averages. Thank you. I see it. They're going to bounce you. Why? And we also have resting liquidity. We got a bunch of shorts that are not going to be able to sustain downward price action. That simple. Yep. So they're going to bounce this play. You got targets that's going to make it harder to be getting further continuations of the move. Previous day high. That's a pivot area. I think that's also underneath it too. It's a pivot at that previous day high too. Right. But they're going to be pushing it back up towards that area. Absolutely. Absolutely, right? But I can already even see because of the moving averages how that is a consolidated move. Why? Because I got to reclaim that damn 20 on this 5 minute chart. I got to reclaim that damn 20. I'm going to be, I might even ding, 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 bounce up and come back down first. Overall, what you got in the market? The market is inside of a range. What does a range tell you? Range tell you the best time to play it is at the bottom or at the top, not the choppy middle. Your option contracts will reflect that too. Watch and see how your option contracts are moving. They're not going to be moving that good inside that middle area, right? Options move good when your plays are essentially trending. You got to understand this, right? All right, we'll go over that some future videos, right? We'll show you how instantaneous. Like as soon as I looked at this market, I was like, oh damn, we in the damn range, right? It already tells me how I need to play it, either at the top or the bottom, right? So since I already know, you mean already? I already know that this market is telling me that we're going to bounce up. Yeah, absolutely. Watch this. I don't care if you overextend. What do you mean? Continue to drop down lower. It doesn't matter. You got too much structure. Guys, this is crazy. This is crazy, right? People can't see this, right? You come into a market and you're somewhat opinionated or objective about what it can do. This damn daily chart, I heard you an arrow and everything. Daily chart is in a freaking uptrend. Bruh, if you come to that daily chart's uptrend, and those smaller time frames are not already downtrending, I'm talking about Bollinger Band rides as well. Bruh, look at the charts. Now you even understand a little bit of insight about what you're seeing on the charts. Yes, sir. Yes, sir. That daily charts trend will trump all the smaller time frames trends and reverse it. It reverses. That's the narrative that you need to understand about trend. Those higher time frames trends are stronger than your smaller time frames trends. So if they come more so with price action and don't even form the correct trends to reinforce the move, they can't sustain the move. That's why you get yoked back up, right? So essentially you got that here on the NASDAQ. Bro, that daily chart is full uptrend formation. Look at that. 5 SMA leads, 10 SMA in second. That's why this is a live recording. You can go back and start to see this stuff. 20 SMA in third place. Bruh, you come down to that 5 SMA today. Free money. That's free money. That's why I said I don't even think it's going to come down there because it's already running into the 4 hour chart structure with the overextension. But they're trying to play you with the upward move, which you're already getting, right? We're not even playing, guys. We're not playing while we moving like this. Stop playing. We already told you. We're not playing. You're going to struggle at that 20 SMA at that angle. You're going to struggle. You're gonna struggle there first. That's gonna be a consolidation point at that angle. Not those type of angles. It could be flat on that 5 minute chart. It could be flat. That angle is a consolidation point. If you want to sit there and you wait for it, watch this. You got a wick where? You got a little small wick where? Where you get the small wick at? Where that wick coming in at? Probably don't even see it as good on the 5 minute chart. Why that wick happening? For my people who think that price action is so damn unknown, you have to break down that 20 simple moving average on that 5 minute chart first. I think we at the point where coming in right into the open where this 15-minute chart trend is on the verge of giving us a type of V-shaped recovery. right? Because of that stream, because we're already overextended against that 4 hour chart structure. We're already overextended from it. But I already told you we were going to pop up and that 5 minute chart structure was going to be a problem. I already said it. That's why I like the live recordings, because when people play it back, they can't be like, damn, he didn't say that. Right? I already told you. That angle. Already I told you I don't like that. Essentially, the 1 minute chart trend, you're gonna have to come up there and push it further through. So the 1 minute chart needs to really bring that 5 SMA and push it on through that 20. Right now, the market is still essentially what I call compounding, right? And what I want to see that it does, I want to see that it actually builds the liquidity that I already know that can't sustain itself because of how badly we dropped from the supply. So I actually wanted to make a very valiant attempt of trying to sustain upper price action. Then you give me the fuel for downward price action to come back on down, right? You're gonna give me the fuel. The only way that I would essentially even look to really take this move initially up, but you break down those trends just a little bit better. All right. So we know that the market is going to pop up. We already know that you can't get yourself back into an uptrend in formation, but because of the fact of how aggressively you came down, you're going to bounce up. But that play is going to die out. Guys, you already know you're going to have a day that looks like it's going to be wonderful to the upside, right? Once it breaks down the trend essentially on the 1530, but it's already telling you it's greatly compromised to neutralize that 5 SMA on the 4 hour chart. This is what the beginning stages of what a neutralized 4 hour chart's uptrend looks like. You start to form what we call sellers neutrals on the 15 and 30. So they're already telling you that when you bounce, you can't get back into uptrend formation. So you overextend yourself and you give the play actually more for you to come back down. Come on, we're playing checkmate over here. It's checkmate. So we know we're going to pop up. We're going to know we're going to come back down. Your option contracts, right? Generally going to make you a lot more money with having the fuel for downward price action, right? But there will be money to be made for upward price action here on the NASDAQ. Appreciate you. Ain't no problem. All right. So you already know what the market's going to do before it does it. But that downward move is a problem, but it's a problem more so when you run into the distant daily charts 5 simple moving average. That's when it's more of a problem. So you still get a very good bounce from that. But you have room to come down once the 4 hour charts 5 SMA becomes neutralized. Right. So you need to draw a line where that 4 hour charts 5 SMA is at. You want to start seeing some things like the Bollinger Band rise essentially on the 1 minute chart, 5 minute chart, giving you a stronger downward move. But right now they're setting up a liquidity pool, all right? Because we already know we can't sustain upper price action, but they playing you. You can't go down. You coming back up. Boom, already coming up. This one here, yeah, market just opened. This one here, I already gave that V shape on the 15-minute chart. Come on, we all over this. But we told you that previous day high would be more of the problematic area here, coming back towards like that previous day high. Even with pullbacks and things like that, that's going to be more of a severe area of resistance in my personal opinion. We still trying to break down through the 30-minute charts, 5 SMA that's coming down at an angle at the moment. And but we did fall and overstand against an upward 20 simple moving average in the 1 hour chart. So sometimes we get narratives where the 30-minute chart, like that trend, that 5 SMA does a V-shaped recovery on the back end. And that's essentially what I see here because you're already being empowered by that 4 hour chart. So you get upward price action. Like I said, the target I would have for you guys would be coming back towards that pivot, towards that previous day high area, right? Even with pullbacks, back towards like that pre-market, previous day high and pivot here on the, you can see it right there. You have the liquidity to squeeze and coming in that strong at the open to come back to where there's more essential, like more resistance. That hit the 10 SMA on the 30-minute chart there. That hit the 10 SMA, and that's why you got that stronger move that comes back down. What I'm doing is like I'm essentially waiting for, because I know we play in a ranging market, and a ranging market, generally this is kind of being the bottom essentially of the area we're in now is like the bottom of the range. That's why it's like a nice place to play the upward move back into some targets. The thing is, if when you're playing options on a play like this that needs to still chop down resistances, chop down trends, your option contracts don't look that good. They don't move that good. So you want to be able to essentially play this stuff when you have clear skies, not during the initial chop. Can you? Sure. Absolutely, you can. Can you target key levels? Absolutely, you can. But you're playing the initial chops of breaking down the structures from that demand. This pullback here, see what I call it? A pullback. Because even if you come back into the same areas that help to jumpstart the move, you don't yet have all the structures intact to sustain downward price action. Not against that 4-hour chart structure like that. All right. So I'm just being patient. I'm away from my setup. I want to see that 15-minute chart, I already know it, needs to give me a V-shaped recovery. Not enough power in my viewpoint to you would have wanted to go up a lot further to actually be crashing back down because you're trying to break through the 4-hour charts. 5 SMA and 10 SMA is still pointed up. You're not even downtrending in the damn 5-minute chart. That formation on the 5-minute chart is a buyer's neutral. It's a buyer's neutral formation. What's the buyer's neutral? It's a neutral trend that buyers are in control of. And you saw that angle. I promise you, if that 5-minute chart's 20 moving average came into the open flat, that thing would go a lot further. I told you guys in pre-market, I was like, man, that 20 SMA at that angle is going to be a problem. It's going to tell me that I need to break down further. I need to further break down 5-minute chart structure to sustain the movement. You can tell by the angle of it. I will post this video. You'll hear it. I will post this live. This entire live will be posted. You will hear it. Let me see what the pre-market low is on this one. I already had talked about the downward move. The downward move is going to get smoked. Are you becoming opinionated because of price action? No, because we already went over this at the open. We already went, guys. Over this in pre-market. Did I not tell you what's down here on the daily? Do we now already have an arrow down here, bruh? You come down if you want here. Watch this. You want to watch? Go ahead, let it rip. If you want, the daily chart is in a freaking uptrend. Stop playing with me, right? Stop playing with me. We're going up. All right. When are we going up? When you break down the structures that help you to empower down. I'm not playing about these damn markets. I know what you're going to do, even if you want to do it choppily. We're going up. You don't have the power. You're not trending. You're not trending the way that you're supposed to, coming against both 4-hour chart structure and the daily chart structure. That part. You got to have conviction in your trades, guys. Guys, you got to have conviction in your trades and know what they can do and what they can't do. You gotta come in with conviction. You gotta come in with conviction. You ain't gonna have that conviction until you get the knowledge and understand market structure. You don't come in here with opinionated guessing. Oh, I said that gap. Stop it. Waiting for things to happen. Need to see it the first 15. Stop it. You need to already see it from pre-market. You got to get into certain formations to sustain things. You got to get into certain formations to sustain things. You're not, right? But this is a move. Like I said, it would better suit me if I was trading like futures. Even though this is choppy, I would have to come in very small, right? But in relation to this move, man, I know you coming up. What did I say already? I said, bruh, you got targets on this damn play. This play has targets like previous day high. Stop playing with me. I don't even care about that chop. It's because of the structure that's underneath you and the way that you came with weaker, smaller time frame structure, and breaking down. I see some pretty good options here for the Qs, and believe it or not, and I think I see like a 735 option. Zero DTE was like 43 delta, 43 cents on the delta, 43 cents on the delta. With this one, like I said, I see that 1 minute chart get a little bit more active because right now you're trading a liquidity pool. What's a liquidity pool? Liquidity pool is if you're playing a sustained upper price action, it would. Okay? If it could, it would. What do you mean? But I thought you thought it was at demand. It is. It is at demand. 4 hour charts demand area. You have to break down the trending structures that brought it down there. So even at a demand area, you're gonna have limitations until you break down the structures that brought it to demand. Right? It's another back end scenario. So even though I know that this play is going to give me further upward price action, I'm not over here silly and thinking that price action just going to randomly pop the hell up. When I understand that I got structures that are still in my way. I got my 5 minute charts, 20 SMA still coming down at me. I got the 30 minute charts, 5 SMA that's still coming down at me, right? I got structures there. And my 1 minute chart should be the first time frame that actually gets into trending formation. Right now, it's in a seller's neutral. My 1 minute chart is, look at my 1 minute chart. 5 SMA leads to the bottom, bruh. You supposed to be leading to the top, right? So you're telling me about how you're setting up this damn liquidity pool, right? Further downward moves creates a scenario where sellers will realize, damn, we messed up. What do you mean? They're gonna realize we can't sustain downward price action. Guaranteed, guaranteed. How do you know it's guaranteed? Because the 4 hour chart can't get into a freaking downtrend, can't even get into a downtrend. Watch this. Daily chart is already in a freaking uptrend. This is a move where I'm saying, damn, institutions come up through the drive-through window and say, hey, you know what? I like my potatoes uh, extra crispy, like dressing their order right now, right? Because this is a move where, like I say, you got some type of trend reinforcements, but not against the structures that you're coming against. So this is a move where, like I say, I can see the institutions already licking their chops because now you're actually creating the fuel for a stronger move to reverse some of these downtrends that you're forming, essentially on the 1, the 5, the 15, the 30. You're not even in a downtrend on that 1 hour chart, right? All right, so what's happening is, if you're paying attention to your options contracts, those calls are getting cheaper and cheaper. And you should be noticing that your delta is looking pretty good on some of these, right? You got some higher deltas. This is exactly what you want when you got a ranging day. Guys, you think I'm playing when I told you that the market is coming into a range? This is a freaking range. And you're at the bottom of it, right? You're at the bottom of it. All right, so you got some option contracts while these people don't understand market structure and they're gonna get yoked back up, right? You got options here. What range we got? We got like 734 strikes. These for August 17th, 734 call strikes. You got $1.15. What is that? 733. Right? You got some cheaper option contracts to form. Even than that, you can go around those 30 cents. 30 cents ones are like, no, not yet. It's not ready. You still gotta wait for the trend to break down. Uh, but even the 735s are like 83 cents. All right. So all we waiting for now, watch this. I'm a draw. You an artist? Mm-hmm. I'm a draw where that 5 SMA is on the 15. Uh-huh. Come on. I don't play about plays reversing. My 15-minute chart trend is right there, right? Mm-hmm. 1 minute chart. You gonna give me, watch this. I already know what you're gonna do. 1 minute chart is gonna say V-shaped recovery with the 5 minute chart. Oh, it's not a game. V-shaped recovery on the 5 SMA on the 1 minute chart. Mm-hmm. You're going to cross. Listen to me. You're going to cross the 10 simple moving average with a V-shaped recovery. Mm-hmm. You're going to be through. Mm-hmm. Listen to me. You're going to be through the 20 simple moving average. Mm-hmm. That 5 SMA is going to draw it through. That 5 SMA is going to draw it through the 20. You're going to be already crossing your 10 simple moving average. You're going to give us a type of you're going to give us a type of what I call a bow and arrow, right? I'm gonna see that bow and arrow, wham, and push that right back on up, and push it right back on up. It takes a while sometimes for a very aggressive group of shorts to realize, damn, you know what? We really can't sustain downward price action. 1 minute chart doesn't even bring the 5 SMA down to the damn pre-market low. Doesn't even bring it. 1 minute chart doesn't even bring the trend to the pre-market low. I'm not even coming down there, right? That's the first time frame that can bring the trend. It doesn't. Look at the 5 minute chart. Bruh, leave me out of it. Leave me out of it. 15, stop playing. Look at the 15. 15 minutes, stop playing with me. You understand why you got that wick. You don't got no damn trend. Now you see the play bouncing. I told you those option contracts, they're on the cheaper side. You got something that's like around 734, 735, 733. You got a V-shaped recovery that just formed on the 1 minute chart, right? Went through the 20 simple moving average on, excuse me, the 5 simple moving average on the 15. I need that 5 SMA to cross the 10. I already drew it for you. I need the 5 SMA to cross the 10, and I need to be crossing through that 20 when it's going through that 15-minute charts. Yellow line where we drew. I want the 5 because why? I already know I need to start seeing glimpses of a relay. The 1 minute chart starts getting itself together so the 5 minute can follow suit, then the 15 can follow suit. You already understand the domino effect? Absolutely. Even before you get into the Bollinger Band ride, the 5 SMA needs to be crossing that 10 simple moving average, needs to be crossing that 20. Come on with a V-shaped recovery. Price action, The 5 SMA needs to cross the 10. The 5 SMA needs to be crossing that 20. I got a bunch of shorts, even from towards like going back towards the previous day high, that will get squeezed for upward price action. What XPX contracts looking like? Only, yeah. That supply from this morning doing a type of trend exhaustion. When will trend exhaustion stop? Daily. you you get the out of the money ones. They should the out of money contracts on XPX. They generally you don't need the higher deltas for XPX when it's ready. It can be like anywhere from like 30 like 10-cent delta. And they'll get working for you when the play is actually ready to give you more explosive moves for XPX. You don't have to go with the end of money contracts because those. All right, get into that then. We'll just sit in it. Yeah, we'll just sit. I'm starting to get my V-shaped recovery on the 15-minute chart. I don't even care if it. I don't even care if it wants to chop around here. I don't even care. I know I'm dealing a little bit more with like a type of trend exhaustion. Am I early? Because I'm basing that on my daily. I got room to my daily 5 SMA. I do. I got some room to come. That the daily is where I know that the reckoning is happening. The daily charts, 5 simple moving average on the Nasdaq. What we got now is an over. We should probably get into the yeah, cancel it. I think this one still maybe wants to exhaust that pre-market. I think it wants to exhaust the structure here a little bit more so. I gotta let it overextend, so I won't have to play the chop. The daily chart already tells me what type of day it is. The daily chart already tells me that that 5 SMA gonna be the reckoning. All right, so it's just setting up as fueled right now, and I think we might get a still continuated down move because it already told you coming to the open upper price action was going to exhaust, but I'm already seeing how we can't change structure just yet. Like that first pop up told me a lot that we did here. That first pop up tells me a lot. So it's actually going to be trying to chop its way further back down towards that damn pre-market low because it has some resting liquidity on the other side of it that can pull it down more. But against that daily chart structure, to no avail, because what it's doing is behind the scenes, it's flattening out that 4-hour chart's 5 SMA. It's flattening. It's flattening with that damn lower high that it forms coming into the open. It's flattening it. It's flattening it. That 5 SMA going flat gives opportunity for smaller time frames to get a further downward trend. That daily chart is going to come to the rescue later, but there's space. That's the thing. I already see that there's space in actually coming down. That 1 minute chart against this structure tells me everything I need to know. That 1 minute chart has to get back into a Bollinger Band ride with the trend coming down this severely between the 15, the 30, and the 1 hour chart. So I got to get back into my Bollinger Band on that 1 minute chart and its distance because I can't even claim my SMAs initially. I got distance. I know we got trap shorts. I'm not debating that. But I know the 1 minute chart needs to go through that 20. On the 5. It's been a thorn in our butt. And you want that Bollinger Band ride to come on that 1 minute chart. I wanted that 4 hour chart to push us the hell up. They said, hey, we brought down that downtrend too strong. We saw that 20 moving average on that 5 minute. That XPX is starting to pop. You still in? Yeah. I didn't know if it was going to play around with this here because I didn't want to do that 20 simple moving average. Even though we're struggling to bring down that 5 SMA down to pre-market low on any time frame, you still want to just let it break down structure. I do have my 15-minute chart giving a V-shaped recovery. I think it's getting ready to start popping back up. I think shorts may be finally realizing, finally realizing to pop back. Let me see, back through the 20. Boom, 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 boom. Are we through? They playing behind the scenes. 15-minute charts, 5 SMAs, a V-shaped recovery, and the 1 minute chart has done the. Let me see here. Has not yet crossed the 10 simple moving average. It's getting ready to come on the back end. Hasn't yet happened. Probably should get another pullback here. That's why I was like, damn, boy, I almost was like, yeah, let me just sit this away. I thought about it, but I don't need to. At this point, you're starting to have 3 time frames that are showing you they're not reinforcing downward price action the same. Now we got a 5-minute chart supply area with that Bollinger Band there. That's right at the area where we got wicked, right? You already know upper price action is still going to get still swept, but you're going to get more of an extended move that still can come back up because you got too much aggressive selling pressure that can't essentially sustain. All right, there goes my 5 minute. There goes the 1 minute charts, 5 SMA going through the 10 as it's starting to go through the 20. That's the look that I told you. That's the look that I drew. That's the look that I even drew that I wanted to see. Right? I want to see that 5 SMA start. There it goes, starting to cross the 20. Boom. No, 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 no. It's just I'm just telling you how it's looking. I'm not trying to get into this yet. This is the look that we're supposed to have. That 5 SMAs crossed the 10, as it's crossed also through the 20. Bow and arrow. Boom, as I'm going through that 15-minute chart structure, right? This is where I start anticipating that the market now starts to want to give me a stronger move back to the upside because of the way that it's breaking down structure. My 5-minute chart is in a Keltner channel squeeze, building up a consolidation power for the breakdown of a level. Look at that. Boom. Look at that price action. Boom. Look at price action. Bow and arrow, right? Boom. Look at that price action. I got into a quick little I sat in it earlier, but I had the opportunity, in my opinion, to come down further. But once I saw that 15-minute chart V shape, I said, "You bastards." You don't pop in the chart. We got a 5-minute chart supply area. That Bollinger Band is C-shaped a little bit at the top. Like I said, there's nothing's changed from this. The same narrative where there's a play that you look to come back towards previous day high and the pivot. You still look for it to come back up to those areas. You actually don't know it, but the stronger way to come down is actually up, not down. Down is a problem. Down is a problem. Your structure would have been a lot better with bringing that 5 SMA down to pre-market low between the 1 and the 5-minute chart. It's not there, right? That should have been my green light special, that knowing that, hey, this is where the bus stops. That 5 SMA not coming down on the 1 and the 5-minute charts. Yeah, green light special for calls. Coming back up towards like coming back up towards like the pivot. There's a pivot here. You can see it on the 15-minute chart, and there's a previous day high here for NQ. You got the green light special. You got some breakdowns of trend right now. It broke down the structure a little bit there. The 15, it neutralized it, even though it was a V-shaped recovery. The 30-minute chart structure is currently being worked on with the 1-hour chart. You even know why you're getting pushed back is between the 30 and the 1-hour chart structure, which you have a liquidity pool that you created from the open, right? You created that from the open with the pullback that you gave. And secondly, you do have another group of traders from the previous day high that dropped that you can squeeze them for the further continuation of upward price action. Even with the pullback serves for the further continuation of the upward move. Even if it's choppy, which we hate with options, but even if it's choppy, that one's still going to be pushing back up. And more of a struggle should be more so essentially back towards that greater area of resistance, like that 5-minute charts, Bollinger Band, that supply up there. All these little moves here, you understand what they are. They're pullbacks. They're not reversals, they're pullbacks. I should have been a little bit sharper. That's on me. I should have been a little bit sharper about that, what that reversal was. I drew it. I knew it was going to happen once we got that V-shaped recovery. 5 SMA going through the 10 simple moving average, as it's going through the 20 through the 15-minute charts, 5 SMA. That's a bow and arrow. At that point, just for that structure even to form that, we broke down the 1-minute chart trend. We broke down the 5-minute chart trend, and we're also breaking down the 15-minute chart structure. You literally have changed 3 time frame structure. It's not a guess just because you're doing some silly things with the moving averages. You literally have changed, and I know that that area is where demand is supposed to be on this chart, right? At that time, I already know you've changed the structure on 3 time frames by giving me that look. It's not opinionated. And you got enough shorts in there that can help push that play further back up where it has more of a struggle initially back at that 5-minute chart supply area. This pullback here, that V shape on the 5, that's why it's so important that you get these V shapes. This is a freaking buyer's neutral formation. All right, let me talk to you. That's a buyer's neutral formation. It's not that I'm just looking for a random pullback with candles. You pull back into trend. You don't pull back just because candles just do red movements back down. You pull back into structure. That's why you get bounced back up. That 5-minute charts, 5 simple moving average for the V shape is a buyer's neutral. You're pulling back into a trend that buyers are in control of. Shorts won't be able to sustain downward price action. They will get reversed. Where? Back up to the 5-minute charts supply area. Opinionated. No. Even the 5 minute chart has, even the 15-minute chart has a V-shaped recovery. Even that 15 has a V-shaped recovery. No. No, sir. Right? Shorts. Mm-mm. No, sir, Mr. Short. Not with that formation. Right? So back towards supply on the 5 minute chart. We will go. It opens up more once that 30-minute chart can start flattening out its trend. It'll open up a lot more. That should help us get back towards previous day high. Hmm? This is that moment where the opening bell shorts realize from what we said in pre-market that the market was going to reverse and absolutely come back up. What happened is they exhausted the trend that they were in between that 1 minute chart, 5, even the 15. They exhausted it a little bit more because we actually wanted to pop up right at the open. We wanted to go right at the open, but the trend wasn't right. Trend was not right. All right, so this is our buyer's neutral area here. Back on the 5 minute chart, buyer's neutral. Why you got a wick right there? Why you got a wick right there? Right there. Why'd you get that wick?
Hi, is checkout at 11 or 12? 11? Okay, thank you.
That 1 minute chart needs to do a V-shaped recovery. That 5 SMA. That supply came down on the 5 minute chart. It came down. Remember how I drew an arrow was up here? It came down more. But at the same token, the 15-minute charts. At the same token, the 15-minute charts trend is here too, with the buyer's neutral. So what is this? It's a scenario where we're trying to break down through 5 minute chart structure and 15-minute chart structure. You're compounding. What does that mean? You're taking on too much. What's the resolution? The resolution is that your overextended move under these conditions, it wants to bounce back up to come back down. See something with that 1 minute chart trend. 1 minute chart can't get into a Bollinger Band ride. We got an exhaustion trend. We got so much distance to come down to that damn daily charts 5 SMA. If you're trading NQ, that's like 30,122. We hit 30,198. So the daily charts trend is like way further away. That's well underneath the pre-market low and previous day close. It's the 4 hour charts trend that you're looking to activate. And with trend coming down this extensively, that 5 SMA on the 1, 5, 15, and the 30. I knew that was the death sentence for the touches back, even it coming back towards like previous day high. Didn't even really give it the chance, I thought, to come back towards pre-market high. But I'm waiting for that trend to exhaust. The narrative hasn't changed. You're not bringing that 5 SMA down to pre-market low. It's not coming, and it's a structure that caused the bounce from the earlier lows. So you still got trap shorts. What you don't understand in the move that continues to come back down like this, it allows for the trend to be able to get neutralized. That's actually reinforcing the move. The reason why is because you're not getting the strength, the power from higher time frames interaction, like a 4 hour chart or a daily. Your intraday time frames, the 1 minute chart through the 1 hour chart, they're like gliding. They don't fly, they glide, right? They're weak without the sustaining structure that allows them to do what they do. So they'll exhaust themselves. Your smaller time frames always get their power from interactions with higher time frame structure. So if I can't bring that 5 SMA, watch this, on a 1 minute chart, on a 5 minute chart, on the 15 minute chart, on a 30 minute chart, down to the pre-market low here for the NASDAQ. I can't bring it. Who's my backup? Well, your backup essentially becomes one or two things. You're going to have to still have stronger bounces back up, right? That's why I know you're going to get a bounce. You're going to have a stronger bounce back up to create a liquidity pool to come back down and break it down through that pre-market low. You're going to have to. You can't bring your 5 SMAs. You're going to have to create up a type of supply. You're going to have to engineer it. I already know it can't come down. How do you know it can't? Because you're trying to break down through the normal backups, which would be your higher time frame structure, your 4 hour charts daily. Yeah, their estimates are coming up. So they're not helping you to come down. So you're going to have to create a liquidity pool. So you're just going to come down to these areas like pre-market low, previous day close, with price action, not with the overall trend on these plays. So you're going to get choppier movement to create the liquidity pools to actually create a type of engineer supply to come further down. You never debate about when these things are happening using moving averages. The 1 minute chart has to form a V-shaped recovery with the 5 SMA. That 5 SMA is going to need to go through the 10 simple moving average there. I was ready. Even we got that first bow and arrow, you could see how 5 minute chart supply area was going to be a problem. So,
Keep everything happening.
Alright, so we have that 5 minute charts demand at the pre-market low. There's a pivot also underneath the pre-market low as well. The structure. That's why, like I said, this weak move down. This weak move down, I know it's gonna get bounced back up. We got the same scenario where that 1 minute charts 5 SMA doesn't even come down to pre-market low. There goes our V shape starting to happen on the 1 minute chart. You got it coming right into a little bit of a curved 5 minute charts. 10 simple moving average. I got the old textbook trend exhaustion play. The 1 minute chart generally does a type of brings that SMA a little bit closer towards that 5 minute chart. 1 minute chart. So right there, that'll be my yellow line. Start bringing that closer. This is your overextension at work. And this is the consequences of price action when you don't want to open and move with higher time frame structure. You want to break it down. Break it down with what? Smaller time frames? Got you. I'm going to set up a nasty liquidity pool to generate the power to give a bigger move. Let's redraw that. Look, I said they overextended the hell out of that move, didn't they? And the whole time that they overextended, that plays in a buyer's neutral. I mean, the whole extended move is in a buyer's neutral between the 5 minute chart and that 15 minute chart. And then it decides that it wants to break through structure with that pre-market low. All right, so this bounce here would actually start to more so start to curve the 30 minute charts, 5 minute charts, the 30 minute charts 5 SMA. It would be trying to curve that. What do you mean? Break down the trending structure of that 30-minute chart to neutralize it. It's not going to go from an uptrend or anything. It would start trying to neutralize it, but more so on the back end. So we get this extended pop up here on the NASDAQ, and you get an extended pop up. You're going to even notice the volume kicks up a notch when it goes through this 5-minute chart's 5 SMA. The volume's going to kick up. The candles will get bigger. Right here. Right here. That woman chart needs to bring that 5 SMA. It did. The woman chart brought that 5 SMA through the 20. Bow and arrow, right? Is that our bow and arrow? Crosses the 10. As it's crossing through the 20. That's what 5-minute chart trend is, right? Where the 5 SMA is. Is that my bow and arrow? Yes, it is. As I'm already going through the 15. I want to see volume now explode. We'll see volume start to come into the play. Even if now you're watching your volume, you should see volume starting to come back into the play with some stronger movement. You got a nice little Keltner channel here on the 15-minute chart here too. Consolidation at a level as the 5 SMA is right there with that 10. So you can see how that will give you a little bit more of a window for upper price action and trying to come back up a little closer towards that 20. But the main thing is that 30-minute chart's 5 SMA needs to go flat. That's what you want. It's a range and play, trying to be choppy and everything else. Got my 5 SMA on the back end. So essentially it's right here, still curving. Alright, so look what the 1-minute chart is telling you. The 1-minute chart is telling you it's trying to bring that 5 SMA. Look at that, bringing that 5 SMA through the 5-minute chart trend. It's trying to bring it. And it's trying to do a closer job of bringing that 10 SMA further up. And consolidating still this 5-minute chart structure here. It's a mix between that 5 and that 15. That 10 SMA is still coming down. What I'm looking for, because you can't bring down your 5 SMA on any time frame, let these people play with you if you want to. You can't bring your 5 SMA down on any time frame from the 1-minute chart to the 1 hour. You can't bring it, right? It can't come. You need to go up much higher so that you can bring it. You're too close to the pre-market low. You're too close to the pre-market low, right? You don't have enough consolidation power to tap into to get the further breakdown through that pre-market low and the pivot that rests beneath it. This play needs to have a much stronger move back to the upside to get the ability to bring its trend down to sustain the downward move so it can neutralize that 4-hour charge trend. Right? So what we're watching is a little bit of the paint dry from the consolidation to break down the smaller intraday trends because they can't just because we don't have with how severely that they came. I guess we don't have the severity of extending an even powerful more time frame like the daily. I wish we were at that damn daily chart structure. We'd have already recovered. But we gotta wait for consolidation, but for smaller time frames to bounce the play back up because you're gonna get bounced back up. They've lured you to sleep. We're breaking down, trying to break down three time frames between the 1, 5, and 15. The 30 is on the verge. You'll see a little bit more of how that 30-minute charts 5 SMA begins to look more so at probably 10:30. I am looking at this at the market structure and how they're not giving us extreme moves back up. This is one where you can tell the institutions still have their hand on the play, helping to push and guide the price action bit by bit. The level of consolidation that the play has to do essentially at areas of pre-market low and previous day close as an options trader makes me not interested in playing the short. If I have to wait for the liquidity pool, the tick for tack to set up my move, like I see the strong move up almost equal size, and now that gives me the justification I can get a stronger move down based on kind of equal size. You got to go tick for tack. Then you're gonna have to play at the top of your play, essentially reversing. Your option contracts don't move the best under those conditions. You're gonna have to go more to the higher delta, the really in the money contracts for those. Really gonna have to go into the stronger end of the money contracts. That's why I said I wish that daily charts 5 SMA was up a lot further so I could actually be getting a quicker breakdown of these trending structures. The daily chart, you're not even, you know that's happening. You want to take that off the board. You know when you hit that, if it gets down to the daily charts 5 SMA, right? You already know to sit back and watch your SMAs begin to crumble from the 1 minute chart to the 5 to the 15. You know that. You're not debating. But there's so much room to get down to it from that daily. If you pull up your daily and you look at that 5 SMA, it's so much room to get down to it. This is a play that they haven't let their hands off the exhaustion trend that this play essentially has. It's almost like a type of relay, right? Where I can see that, for instance, the 1 hour chart's not in full downtrend formation. 20 SMA is still lower than the 5 SMA. You're not in a downtrend and you're not riding that Bollinger Band, right? But smaller time frames are. So it's a type of relay trend. It's a type of exhaustion trend. You hit the supply, you came down. We haven't been able to recover. We wanted to recover. We wanted to recover when we first was overextended through that 4 hour chart. It's 5 SMA kind of towards the open. But the supply that we hit so greatly influenced our smaller time frame structure where we couldn't recover. So we squeezed the buyers that tried to create that reversal for the further downward continuated move, right? But this is the narrative that they've been showing us every time we still come down to key levels, pre-market low, previous day close. Watch this. I can't bring the 5 SMA with me on any time frame. If you show me a chart where you sustain downward movement and you don't have to bring that 5 SMA down with you on other time frames, make it known to me. Because every time in my trading career that I see that that's the scenario that you're presenting, especially when we got scenarios that the 15-minute charts 5 SMA can't come, it's just even more severe if the 1 minute chart is struggling to bring that 5 SMA down to a key level or up to a key level. It's telling you that you're coming there with price action and you're not coming there with trend. Because even if you get a, say, overextension or a demand of supply, well, that 1 minute chart very quickly is trying to bring that trend with you to reinforce the move. So, in not bringing it, you're giving us these scenarios where we're going to get still pop back up. Mine's going to be popping back up. And what you do is, like, if you were a scalper on plays like this, you have opportunities to take safer scalps. And with me, once I allow, if I have multi time frame trend that's coming down at me, I got safer opportunities to take it once I can see that several time frames have been compromised by the support or by the resistance. So I want to see, of course, my 1 minute chart do a V-shaped recovery with on the 1 minute chart. But then I would want to see that my 5 minute chart's 5 SMA stops coming at me. And if my 15 minute chart's 5 SMA is right there too, I want to see how they're both compromised and changing. So at that point, I can already make a correct assessment. I know that we're in an area where there should be strong support, but I've also sat and wait for 3 time frames to show me that they're backing me now to sustain this move. Make a note of this. Like when that 4 hour chart's 5 SMA, because we all see it, that 4 hour chart's 5 SMA. When we have what's called a seller's neutral, you still got downward SMAs like on the 15 and the 30. They can give the opportunity to help to neutralize that 4 hour chart structure. They were doing this a lot last week. That's why I already had to start emphasizing the daily. So I know I got the 4 hour chart plus the daily, right? 4 hour plus the daily. I know, okay, got you. Because I understand that those smaller time frames, if they don't allow that upward move to recover, you're going to create the traditional lower highs to start breaking down that structure. But you see, at the same token, while I'm not interested in playing these moves through these targets, like you got traders out here, take that trade right there as you go through that pre-market low. I don't want that. I already know that this play is trying to break down through 4 hour chart structure and struggling to bring that 1 minute chart's 5 SMA. The type of liquidity pools that you need to set up to build up fuel to sustain this move. My option contracts are nasty. They're not gonna be making me no type of money. What's bad is I probably have a feeling that the play that I looked at over the weekend is probably doing good. Netflix. Let me look at Netflix. Let's see if you broke down your structure. You held it. Oh, Netflix gonna bounce the hell back up. Got that strong trend. What did you do? Oh, there you go. I saw it. So Netflix got that 10 simple moving average from Sunday. That's a different look. From Sunday, you got that 10 SMA above the 5 SMA. So that you're still overextending through that. You're going to get a bounce on Netflix for sure. Netflix is in the uptrend on the daily, but you're going to have, see how far that 15-minute chart, look how far that 15-minute chart trend comes down like that. This is textbook. This is a 1 minute chart's Bollinger Band ride. When that flattens, it's not even questionable. That 1 minute chart absolutely gets into a Bollinger Band ride for that one. If you looking for one, you're gonna have you wait for that one. You're gonna draw the line where the 15-minute chart's 5 SMA is. Did you hear me? You're gonna draw the line where the 15-minute chart's 5 SMA is. You're gonna draw a line. Add one thing to your chart. Add one thing. I'm gonna tell you why the trade works. It's gonna work so good for you. Or with this play here for Netflix, while we work. By the time that 1 minute chart gets into that Bollinger Band ride, as it goes through that 15-minute chart's 5 SMA, 3 time frames have stopped downtrending. Three, right? That's not even the creme de la creme. The creme de la creme is that the daily chart is in an uptrend. The daily chart isn't co-signing any of this price action, right? But you're in a Bollinger Band ride down, so I know you really have a type of exhaustion trend. You really do have a type of exhaustion trend because you're in a Bollinger Band ride from every time frame, from the 1 minute chart to the 1 hour chart. So you can't even play with that one. You got to have 3 time frames get underneath you, so you know you will start breaking down more. How I know this play is overextended because also the angle of that 20 simple moving average on the 4 hour chart. You're compounding. You're taking on 2 time frame structures at once. All you gotta do is wait for the 1 minute chart to get back into the Bollinger Band ride as it goes through. If you draw a line, look at that. It's right up there with, ain't that funny? It's right up there with the Bollinger Band, right? For Netflix. So Netflix will give you some money when you get that. If you don't understand it, the daily chart can't get into a downtrend and neither can the 4 hour. You mean with that move? With that move, they can't get into. The only way that that play would be able to continue would be, and it can't even do that. Even though you would say the weekly chart here is not in a downtrend and we're overextended it, so that's why we're popping back down like that from that weekly. That weekly chart wasn't trending, so the fact that you lose the trend on the 1 minute through the 1 hour chart sets up a type of liquidity, a resting liquidity squeeze where these buyers that are in the play, they get squeezed out the play to come back down, but it's still context. There's still structure that actually is helping that play to stay up between the daily chart's uptrend and the 4 hour chart, even though it's neutral at the top, that 20 SMA is a buyer's neutral at that angle, right? So it's overextended it, right? So you already know that, hey, you watch the domino effect of how the 1 minute chart first reclaims its trend in the five. Once you start approaching that 15-minute chart's 5 SMA, watch, once you start approaching that 15-minute chart's 5 SMA, you need that Bollinger Band ride on the 1 minute chart. Because the 1 minute chart screaming to you that it's in an uptrend. And by the time you're getting that, the 5 minute chart will be neutral, and also the 15-minute chart will start forming a buyer's neutral because of the severity of the demand from the daily charts uptrend. Your SMAs are too far away. Price actions down here, don't believe the hype, guys. Price actions down here at daily demand. The trend. Your trend is up here. You can see it. Your trend, look at 30-minute chart. Your trend is up here. Okay? 1 hour chart. Watch this. Your trend is up here. So who's helping reinforce this move? You don't guess me telling you to me telling you those three time frames and look at that. The 15, you know how severe it is of me sharing that because it comes off too freely. The 15 is reinforcing this. The 5 is reinforcing this. Minute is reinforcing this. So if I get back into that Bollinger Band ride, I'm compromising the three time frames that's reinforcing the downward price action. I got a bunch of shorts that need that trend to stay in the play. They're not gonna have it. When Netflix starts giving up a good chunk of the move, don't become circumstance. These are plays with this type of setup where you see that you reclaim generally like 50% of that move rather easy once it breaks down in structure. They reclaim, and traders always be shocked to see that it does that. Ain't no reason to be shocked. You want a formation to do that. We already know it. NASDAQ always wants to give the most exotic look. Look at this chop that we got on this damn play. Because you can't sustain downward price action. And all you're doing is consolidating the very trend that brought you down here. And you gave the death sentence. And I don't even see how the charts, look at this. It looks like I'm saying silly stuff talking about we had pre-market low on the NASDAQ, right? Until you pull up NQ's chart. NQ's chart's got something totally different going on and showing you about market structure. So if I've been saying some things that you guys are kind of like, I don't know where he's talking about we touching pre-market low, it's from NQ futures, which on a Monday, I never want to look at QQQ. I don't because it doesn't factor in all the full time information that we have. I'll go to NQ's chart. You find more so looking midweek Wednesday and beyond. You know the charts are pretty much at the same spot. On a Monday, I don't look. I don't look at QQQ's chart. I won't look at it. It's always generally going to have some differences. That even though they're subtle, you won't have insight about why your play is moving the way that it is. Pull up the NQ futures chart. Pull up ES futures on a Monday, right? Because you can see as clear as day we hitting for Nasdaq, we hitting the damn pre-market low, which we are not doing. We are not doing that on Q's chart. And while they're luring you to sleep, with once again They're neutralizing that damn trend. That 1 minute chart is getting closer and closer. Look at this V-shaped recovery. Back to that 1 minute chart's bowling band ride. Look at that. While they're luring you to sleep here on the cues, right? Because you can't sustain downward price action, but you had a damn exhaustion trend. I told you that 4 hour chart can't get into a downtrend. So it's red flag. Even though we know the daily chart is more distant, we still just pay attention because the one thing that the market will teach you is that if you make trades just based upon thinking that levels are supposed to hold, they're going to get you because a lot of times the market loves to overextend. So what I have to really look at is even if I'm at an area where I think support should hold, or I think that resistance should hold, pay attention to the structures that are causing the play to continue to come down. Because once it loses its structures, it can't continue to do what it's doing. You got to lose the structure, right? So we already know that. Look at this. And it makes sense, right? You got a bunch of sellers, can't sustain. Look at this. Death sentence. 5 SMA can't come down to pre-market low. This is a death sentence. This is the same death sentence that I gave this play and try to have moves back up to previous day high and try to have moves back up to pre-market high. You're not going to be able to bring that 5 SMA up there. What does that mean? Especially from the 15-minute chart. If I can't bring it on the 15-minute chart, you're telling me I have a very weak form of trend. Very weak. Where I'm going to be reinforcing the move that I give by smaller time frames that can get in and out of trend. Why do you like daily chart so much? Daily chart can't get in and out of trend like that. Why you like 4 hour chart? They can't get in and out of trend like that. 1 minute chart, 5 minute can get in and out of a trend. Hey guys, 1 minute chart's in an uptrend. Hey guys, 1 minute chart's in a downtrend. Not as severe, right? Got you. We come into a morning where the 15-minute chart, which is not the daily, not the 4 hour chart, says, bro, I can't bring my trend down. I can bring price action to key levels, like pre-market low. I can't bring my 5 SMA down there, but I can bring price action. I'll do the best I can. Okay, I see the story that you're saying. You can bring the price action down to pre-market low, but not your trend. Well, the problem with that is we're trying to break down 4 hour chart structure, right? Where the 5 SMA leads 10 SMAs in the same place. That's the problem with that. We can't even get to the 20. We already know that would be a problem. Absolutely. No daily chart assistance needed, right? We would already know that, right? You get bailed out because you have such a strong intraday trend to keep coming down because you're creating your fuel from that. But you see how limited it is, right? It's limited because even in coming back down, you're coming down too damn quick and you still can't bring that damn trend down to these key levels. Pre-market low, previous day close, you still can't bring the trend on some of those bigger time frames. Because whenever I need, it's an asterisk moment for you. Whenever I need that 5 SMA to be coming on a 15, 30, 1 hour chart to bring trend down further, key levels ain't gonna get it done. It's always gonna be like a run-in with a type of demand or supply, which comes from the trend on higher time frames. Well, that's problematic. Why? Because the trend to come further down, it can't come from the trend on higher time frames. Why? Because they're in uptrends. I would need the trend on higher time frames to be in a downtrend so I could create supply to come back down. I can't do it. So that's why I know without a shadow of a doubt, if I got some Picassos in the room, right? If I got some Picassos in the room, this is where you Picassos really want to start drawing, right? Drawing there. Oh, we start to form a little bit of a flag, right? This is when my Picassos would really want to start drawing things, right? Because you know that the market's still gonna be coming back up. The trend of the play tells me. I don't know if that's too detail oriented, but that's what tells me. That's what tells me. So a move that I wanted early. I wanted the pop up early. The damn thing has a damn exhaustion trend from that supply. And you could tell in coming into the morning because even with the recovery, We can't reclaim things. So this is what I say in pre-market. I'm like, damn, I already know the problems I'm gonna be experiencing coming back into these structures because of the lack of recovery for some of my higher time frames. I won't even give too much emphasis to the 1 and the 5 minute charts recovery, even though I know I need them to first recover, right? But if I can't start bringing that 15 and 30 minute charts trend, that's why we spent the whole little first part of the day looking at market structure. If I can't bring the trend in on the 15 to 31 hour, oh man, this gauges how strong my trend is, right? I got a very weak trend because the 1 and the 5 minute chart can lose their trend very fast. So I need that 15, I need that 30, I need that 1 hour. But this play just wasn't able to break loose. And you could tell it wasn't going to be able to break loose because when we got that first pop up, I said, damn, we running back into 5 minute charts supply area. And this is a play I still, the confidence is like, bruh, this is a play that still screams to me, pop back up to previous day high, but it's going to take time. You said I changed your trading? Yeah, you base everything about from the trend. You base everything from the trend. So for instance, while we are here in chop land for NQ, because this is a play that has a struggle, let me tell you what institutions do, and hopefully it's not opinionated. Institutions say I can only get into trades at certain areas. We don't debate what those areas are. They're called demand and supply. Areas where they can have enough orders that they can get their order filled. But when they get in, they also got to make sure that the play that can sustain upward and downward price action, because they can't get in and they can't get out anywhere, right? So when they get in, you know that play has to go to an area where they can get out, right? So they'll get in at a very particular area where the trends of that play will now serve it to reinforce the move to areas that they can get out. Even with adverse price action, it can't come back down or it can't come back up. So it's still going to serve them to get in and out of the play, right? So essentially, this is the difference between institutions and retail traders. Institutions have very specific areas that they're going to enter and exit plays. Secondly, they're going to make sure that trends reinforce the move up or down to get in and out, right? Thirdly, institutions only trade, watch this, trending markets. When you come into plays and you see, oh, boy, we about to hit that 4 hour chart structure like that, you know you're trading a market that wants to manipulate. Manipulate what? Manipulate the structure to get into a trending market. Institutions are not playing ranging markets. They are manipulating ranging markets to do what? Get back into trending formation. They play trends. Institutional entry and exit are called demand or supply. Any other entries that they take are simply to manipulate the market to get back into trending formation. So you got retail traders playing any and every little bounce into targets, right? Because we can make money between the ranges of a play from the bottom or from the top, right? So this is a play still, me looking at the NQ, this is still the bottom of the range that we're in right now, right? That wants to pop back up to the top, absolutely. And we know it's going to pop back up to the top. It's going to pop back up because these shorts can't sustain no damn downward price action. So it's going to pop back up towards the top of the range that it's currently in. This is the manipulation of the market. You're not trending. What lets me know instantaneously what type of day it is, how quickly, at least, because I got two types of trend. I call it intraday trend, and I call it like more micro trend, and I call it macro trend. Micro trend, I'm in my Bollinger Band rides. SMAs are trending from essentially the 1 minute chart to the 1 hour chart. Macro trend, that scenario I just mentioned, plus the 4 hour charts and the daily charts are following suit. They're trending too, right? My institutional moves, when I know that, oh boy, they in that thing, they're not just manipulating the market to get into trending formation. Man, that's as easy as me seeing that I can get a multi-time frame Bollinger Band ride from the 1 minute chart to the 1 hour chart. I can get my SMAs all in sequence between at least the 1 minute chart to the 1 hour chart. I know the move is further intensified the more it incorporates either the 4 hour chart, the daily, the weekly. You understand? So, like I said, you got to understand this, guys. Even right now with the NASDAQ, you're trading a play. If you're trading this right now, you're trading a play that's at the because it's at the bottom of its range, where the 1 minute chart is getting back into the Bollinger Band ride here on the NASDAQ, starting to get back into that Bollinger Band ride. It's going to pop back up. You got a nice little consolidation squeeze, counter channel squeeze. You got a bunch of shorts that can't sustain downward price action. A little bit more on the choppier side. This will be coming back up toward that 5 minute chart supply area here on the NASDAQ, because these people don't realize they don't have the structure to continue. It's all over the board. The 1 minute charts 5 SMA. Guys, the 1 minute charts 5 SMA cannot come down to pre-market low. You can't sustain downward price action. I'm sorry. You got to have a severe move up. You got free money for calls for NASDAQ, at least taking it for more of a choppier move back up to that 5 minute chart, back up to this area where you essentially fell off. That's free money for the NAS. If you want, I think SPY probably has the same thing going, but you got a free money play that's going to be bouncing back up at least towards this like 5 minute charts supply here for the NASDAQ. Yeah. It's going to get back into that Bollinger Band ride on the 1 minute chart. What happens is, I told you guys, they're luring you to sleep. Whatever you say. Yeah, it doesn't matter when you get in. You get in now or later. What they're luring you to sleep because they got that 30-minute charts, 5 SMA. You don't realize it. It's starting to flatten out. You don't realize it because they lured you to sleep on it. You have literally exhausted the trend on the 1 minute chart. On the 5 minute chart, you're exhausting it now on the 30. You mean the same structures that are helping the play to sustain downward action? Yes, they're becoming exhausted because they can't bring their trend down lower. That means that even in a choppier market, you understand that you've essentially cornered the price action and it has to essentially start coming back up to come back down, not vice versa. So it needs to get back into that 1 minute charts Bollinger Band ride, start riding that thing. You got a little bit of greater resistance and coming back up towards the 5 minute charts 5 SMA. But that'll put you back towards the areas where essentially the play drop. The adverse price action, just like with institutions, serves the play to come back up. That's the game that institutions play. Adverse price action will serve me, not hurt me, will serve me. It doesn't, the Bollinger Band ride tells you if a play is trending or if it's in a range, right? So if I have a multi-time frame downtrend, well, I know that the 1 minute chart is going to be the first time frame to get into that Bollinger Band ride, right? Because your play is just telling you if your play is in trending formation, right? For whichever time frame that you're looking at. Don't gauge the play entirely always by the appearance of that Bollinger Band rise, because there's things that can happen still at the back end of a play. But on plays where I need to get back into trending formation after a strong move up or down, oh yeah, every single time the 1 minute chart will be the first time to get back into that Bollinger Band ride in comparison to the other time frames. But you got mixed scenarios, because you can have scenarios where only the 1 minute chart maybe gets out of the Bollinger Band ride, or like, there's different sequence of events that kind of play. There's times where even a strong move down to get started, I'm not in a downward Bollinger Band ride yet. So it's not based entirely on it. You didn't get into it yet?
Yeah.
Oh,
I'm in the 733.
okay. Yeah, so I want to see that one come back up to the 5 minute charts towards supply, because I got more than enough shorts that are trapped in here because they don't know no better. I tell you the death sentence of this play and actually not bringing anybody. Like, this is like get out of jail free card here, right? Nobody wants to bring their trend down to pre-market low here on NQ. Nobody. We just want to bring straight up price action and attack 4 hour chart structure like this. Bruh, every single day, I generally can point at a play and say, look what 4 hour chart trend is doing. Boom. That's why we moved. Like, look what daily chart trend is doing. Boom. Like, that's my reference point. When I look at my trades, my reference points is higher time frame structures interaction that creates demand and supply, or even higher time frame structure that goes neutral, which allows smaller time frames to continue trending, to reverse a strong move up or a strong move down, right? It's always my reference point. So if my reference point this morning and looking at the NASDAQ is saying, hey, 4 hour chart ain't no damn downtrend, right? Well, I'm putting the narrative that, well, shit, smaller time frames better keep their trend alive because 4 hour charts not in no damn downtrend, right? Got you. But you give me a very strong, smaller intraday trend that we have to, what time is it? Going towards 11 o'clock. I got to wait for this damn trend to exhaust itself, right? To even start to have a stronger move coming back up to areas where we were essentially at 9:30-ish area, right? Because that's how strong your damn intraday trend was. I got you. I read the board. I read the context of that play. But I already know that 4 hour chart is not backing down. You don't have no assistance. Because I would even have to see if you had assistance from the daily chart to break down forward, assistance from the weekly. Your assistance comes solely from the 1, the 5, the 15, the 30. Got you. So if you're sitting here watching the dust settle, you can literally see how you're losing the trend across the board, right? You're losing the trend across the board. It's not a momentum play. I try to tell traders this all the time. You're not trading momentum, guys. You're trading trends that reinforce upward and downward price action. You're playing trends. So if I'm sitting here literally watching bit by bit, literally bit by bit, that trend, that trend, that trend, that trend, lose, right? Because even when you look like you wanted to go further down earlier, right? When you look like you want to go further down earlier, like the 15-minute chart started doing a little bit of a flattening. The 30-minute chart was right behind it, like I got you. So we come back down again, right? But then I noticed we come back down again. Watch this. Can't even bring the SMAs on the 1 minute chart. That's a red flag for me. Especially that 1 minute chart. You don't understand. That 1 minute chart tells me a lot. A lot of people don't like that 1 minute chart. I love that 1 minute chart because that 1 minute chart really sets the tone and telling me how I can basically open the door for the bigger time frames. So if it starts telling me, hey, I can't even bring my stuff together to sustain this move, shit, we ain't got a chance with the 5, 15, 30 because they need an inside man. They need an inside man to get this job going. You understand what I'm saying? So damn, 1 minute chart can't open the door. We ain't never getting out of prison. You understand? So this is a move where I'm taking it back into structures, back into targets that can do something. Right. So my first initial target, this one I'm gonna be targeting that 5 minute chart supply area. Why? Because I got the damn resting liquidity that I need. Right. A bunch of silly shorts that think we can sustain downward price action. Bunch of silly shorts that don't understand market structure. Yeah, the Bollinger Band gonna be like one of your best friends a lot of the times, but starting to understand market structure. But there's other times where you gotta understand the setup of your play where you may be getting a move that was multi-time frame downtrending, but you open in demand. Well, that's the scenario where watch this. Not only will my SMAs get into certain formations on the back end, so will the Bollinger Band ride. My play was brought to me by demand, or my play was brought to me by supply. You understand? So you have to understand the narrative day by day that's setting up the power for your play. And then you got little tools that can essentially help and guide and assist you. So that's one where, like I said, I want to see it. I want to see it stay on the right side of the SMAs. Like my 5 and 10. I don't want it essentially coming back under it. Show me I got more trend exhaustion strength. So essentially with this one, I want my 1 minute charts 5 SMA to stay above that 20. And of course, I wanted to stay, the price action as a whole to stay back above that 15-minute charts 5 SMA. Or excuse me, I'm at look at the 30. I think we're already above the 15. We were, but yeah, I wanted to stay back above it. I think that's 30,213 area. So I essentially want to stay in between that range right there. I don't want to be on that side. I get underneath this side here. You still trying to do a damn exhaustion trade. I can just have more weight to get through. If it gets through that bottom yellow line, I can wait. I'm not gonna let it get through that area. Because I only wanted to take it back up towards that supply on that 5 minute. Okay. All right, so that's what it is. So we're waiting for it to get back towards that supply. That VWAP shouldn't be as significant this time of day. It's something that's more severe generally later parts of the day. We're trying to treat these moves as pullbacks and tap into the rest and liquidity that this play has from the drop off that essentially it did from the open. Right? You gotta understand how the play can still serve you with the structures that it forms. I told you we got that V-shaped recovery on the 15-minute chart, which I like, and I want that 30-minute chart to do something behind the scenes.
Go get the card.
Okay.
We got it at 90%.
Now, generally, the market, gives us way more extensive moves by this time of the day. But that just tells you how much the market structure was already greatly shifted coming into an open, right? Especially for a lot of our traders that believe that the market does what it does.
Give me your keys. I can get the card. Just keeping that on. No, keep the card key. Card key. Get the really card. Okay. I'm just gonna bring it up later on.
Yeah, everybody should still be good. We still getting this nice little move. When you use SMAs like I do, You understand when they move on the back end, so you got to know when you dealing with a type of demand or supply that gets created on the play. That, like for instance, that 30-minute charts 5 SMA, I would know that's curving on the back end, right? That it's curving on the back end. So you're not up here basically trading the ghost of Christmas past. Getting some nice little bit of volatility in this one as well. The only thing that's bad about trading, in my opinion, guys, here it is back at the 5-minute charts supply area. The only thing that's bad about trading for me is I don't, I'll see these plays and call them out in pre-market. That's all the way to our TP there. We might get a little bit of an overextension, but all the way to our TP. I already had the arrow drawn there. I call this out in pre-market. It didn't go still towards, it didn't go all the way still towards areas where I want it to go. It does not go all the way still to areas where I want it to go. But in terms of the downward move getting smoked, yes, sir. That's a pre-market call, right? This is stuff where I want to see that we got the overextended move. I wanted it to come back to previous day high. Yeah, I know that, right? I wanted that previous day high move. Anybody, did anybody catch this one with me? That's 4-hour chart. That play, very easy. Even though the market is choppy because it's in a range, right? So essentially, look what it does, though. Look what it does. It gives this initial move and benefits from the initial move down, back up, right? When you're in a ranging market, right? And that play essentially comes down towards what you know to be the bottom of the range, top of the range. It becomes a tick for tack, where essentially the trade makes sense based upon what you've done, because we're going to reverse on that, right? So like I understand like what type of fuel you're going to essentially start to give me. Anything else that you give me is because I have to go further back, right? And then see that there's also a form of resting liquidity, right? From other areas where I can get the further continuation of a move, right? This one here, I'm not the biggest fan of trying to take it beyond that 5-minute charts supply because to me, look at that 30-minute chart structure. 30-minute chart structure with that 10 SMA coming at me like that. This screams almost of consolidation. But look at that 30-minute chart. Didn't I tell you it was going to be given like a V-shaped recovery on the back end? That only becomes Lashes. How did you know it would do that? Because it wasn't looking like that when we first took the trade, right? How do I know? You got to know where demand and supply is sitting on your chart. That's why I'm such a big fan of the 4-hour chart daily. Well, I know from the time that you came down like this, bro, 4-hour chart's not in a damn downtrend, right? So it puts the emphasis on smaller time frames to stay in the structures that they're in to sustain upward or downward price action, right? When we sit here and we watch the 1-minute chart go, 5-minute chart go, 15-minute chart go, watch this. Now, even though it did that strong move down, bounced up before it came back down, you thinking, damn, it's gonna do the same thing. We got a ton of shorts that are in this play, and they've all given death sentences by not being able to bring down anyone's trend to pre-market low. That's the whole thing. I kept saying that. I'm like, bro, that 5 SMA is not coming. It's not coming. So I won't be surprised to see how far. Yeah. Hmm. Yeah, I just took it to the to the target because I said I'm not really trying to play that 30-minute charts downward 10 simple moving average. I'm not trying to play that consolidation right there. I don't want to play that. So I said I'll wait for the consolidation because I already know that the market's still telling me of scenarios that honest. You know what's funny? I feel like it's gonna hit this damn previous day high and even give a little bit, probably a little bit more of extension. But the setup as a whole, look at that. I'm already so far beyond this. The setup as a whole is what I told you guys from pre-market. That upward moves have death sentences in having too much of an extended move because the drop off doesn't really recover those plays. Those plays got to have some nasty pullbacks into trends in order to get it. And it's giving much more of an extended move too, ain't it? Ain't that about a beep? But that's because that 4 hour chart is demand. All right. The trend of higher time frames is the demand and supply that creates dominoes for your smaller time frames. It's not guesswork. I could pull up your we could pull up other plays inside of the market and pay attention to them. And we had some people that was in the room. A few of them, I don't know, they dipped. I guess they didn't like the way the market was moving. They start thinking that it's subjective. Okay. Ain't nothing subjective, right? The market's in an entire formation to do what it's doing. So ain't nothing about it subjective. Nothing. Nothing about nothing. If news comes out, you're still not subjective that the fact that the news has to help to break down the structure if it's going to go against what the structure of a play is in. You're not getting around the structure of a play. If I'm all my momentum is leaning towards the left, whatever's going to fix me back to do something else, it's going to first correct my structure, right? So I'm not going to gauge what it is that I'm hitting. No, it's going to be what has to have the force to actually correct my structure first to give context. Because if you can't stop my structure, it's irrelevant whatever else is coming. You understand what I'm saying? So that's how I treat news. I don't treat news independent, especially if you see that there's a very nasty, severe trend. Damn, the weekly charts in a downtrend. News ain't about to beat that, and there it goes the previous day high. You bastard. All right, so if you guys are in that trade, make sure you take that out. Right? That's previous day high. Ah, take some profit off of that. That play is performed exactly as it needed to. We got some things that happened on the back end, and all it was, the play wanted to take off early. Look at that, early. Had to actually come down to get more fuel. You understand? That coming back down is what led to the exhaustion of the trends, bringing them into deep water. They don't have the backing, watch this, from popping up into a higher time frames downtrend, which creates supply, so we can keep coming down. They're actually in coming down trying to break down higher time frame structure. Smaller time frame? Break down larger time frame trend? Hell no. Deep water, right? Doesn't have the institutional backing to sustain downward price action. They told you how weak it was when you see that the first time frame that can do it, the 1 minute chart says, hey, buddy, hey, buddy, hey, I can't bring my 5 SMA down to pre-market low. Damn, you the first one. I can't do it. I told you earlier. You sure did. I told you I wasn't about that life. You sure did. You sure did. You did it twice, right? We bounced twice, right? I can't bring my trend. I can come down with price action, but not trend. Damn. I can come down with price action, but not the trend. The trend of the last 5 candles closing averages can't come down there. On the 1 minute, You weak. You're not gonna be able to hold down what you are starting. Y'all see that? You're not gonna be able to hold it down. It got momentum. Who cares about momentum? Do you have the internal structure to keep what you start? Nah, I ain't got it. I'm actually struggling. I'm actually this in my mama name. Oh, okay, got you. Got you. Say less. Watch this. Say less, right? You got backup. This is where the market got a little tricky. Well shit, the 1 minute chart can't. The 5 minute chart said I'm not coming. We still have other time frames. Mm-hmm. That part. That was still helping it. That's why I always start looking at my 15 and 30 under these conditions because I be wanting 3 time frames or more to get behind me because then we can start addressing if I get the 1, 5, and 15, we can start going to work against the 30. We can start going against the work against the 1 hour, right? So I noticed that, right? So this one actually told me a little bit more, even with this initial bounce, because that 10 SMA at that angle. Remember the angle on the 5 minute chart with that 20 SMA? Yeah, look at the angle on that 10 SMA on the 5 minute chart, right? That's why we went into an entire Keltner channel squeeze here. That's why my chart goes like that, because it's the consolidation at a level, right? It shows me don't go to sleep. They luring you to sleep. Don't go to sleep yet. Don't go to sleep yet, right? Consolidation. I told you this is when traders start becoming Picassos. I told you. I said because they're gonna see that play give a strong move up, and they're gonna think it's because of the pattern. It's because of the breakdown of the trend, right? And I understand you have the 4 hour chart structure to do that, right? To give that mouse move back up to a target. Why do you know you're going to struggle up there at the previous day high? Do not sit in that play. Don't take nothing off the table. You got the same dynamic. You got price action coming up there, not the trend. Even on the 1 minute chart. Price action up there, not the trend. Stop thinking things are momentum based. You just go from target to target. Nope, you actually build the structures to do that. Yeah. All right, guys, I'm gonna holler at y'all. All right, I'm gonna holler at you. I gotta get out of here and pack on the road. All right, so I'm gonna take that. But like I said, like I said, it's just a choppy market. So just take essentially what it gave to you. I didn't have any insight that that play could actually go to pre-market high. Just with the structures, they were too severe. Two severe structures. I think Asia's session later today is actually going to be probably getting a nice move from that daily. If we have a further breakdown of the move here, I think the Asia session will be getting a nice move from that daily chart uptrend. That's going to be on the late side, but yeah, market pretty choppy, so I'm not as interested in trying to play in the further continuated moves up. All right, guys, I'm gonna let y'all, and I'll post this live here. When I get a chance, I'll post it. So there's a lot of little gems here about that play. And the main thing is market. Like I said, not doing a whole lot of technical analysis. I think the only thing I needed to be sharper on, and coming into this open, I was on that damn 5 minute charts, 20 simple moving average. I needed to be a little sharper because it already told me of exhaustion trend. It already told me by the angle of that 10 simple moving average on the 15-minute chart, and also with that angle between the 30 and the on the 30-minute chart, that angle between the 5 and the 10. Because there's no way I'm gonna be taking on that 10 simple moving average on the 15-minute chart, right? Yeah, I'm taking it on, right? Look at that. Even if it goes neutral, I'm taking it on. There's no way I'm gonna take on that 15-minute chart's 10 simple moving average at the same time that I'm taking on the 30-minute chart. That's compounding, right? So it told me it needed to exhaust. So even that chop here that was more extensive, I already should have saw that from pre-market that I was dealing with an exhaustion trend. I know we coming back up, but you still want to catch these things at the right time. You understand what I'm saying? You want to catch them at the right time. I knew it was the right time because I could start to see that my 30-minute chart was starting to show a little bit of flattening. I know it's not going to show me in real time, but my 1 minute chart is going to be already saying, hey, but we uptrend. 5 minute chart, hey, baby, we neutral. 15 going to start showing me V-shaped recovery, right? So I already know by a stage of events, boom, we good to go to take it up towards a key level of structure. right? So that part. So it's all essentially like in pre-market. If you can't see your plays in pre-market, just like I said, you'll work on the timing. The timing you'll get better and better and better with because you start to understand the formations and structures that they need to form. But pre-market sets the tone. Where most traders think coming to open, let's see what happens. Pre-market sets the tone. I already know we're gonna be popping up, and we're not gonna be able to sustain it, and we're gonna be coming back down, right? I already know that. I already know the move up is another trade to come back down. Ain't no way in hell you gonna sustain your trends. You understand what I'm saying? I already see that. I already see that. They even gave you death sentence. You can't bring the SMAs up on 1530 1 hour chart to pre-market high. You can't do that. So you see the double side, double-edged sword there before it's something. But like I said, the angles of those 5 and 10 was an entire narrative. Like I said, I'll definitely be sure to make sure I pay just a slightly more attention towards that because it doesn't even matter if you get the V shape, you can't recover. That's advanced. You can't freaking reclaim. You can't take back the structure. You come up here with price action. And the thing is, when you give the price action, which is beautiful, right? Yeah, you're already attacking a 30 or 1 hour charge trend too. So it's too much selling pressure that takes it out. All right, guys. Peace.